What is the exact science behind the shooting star candle in trading? Let me explain with the help of an example. When buyers start constant buying, then due to buying pressure, price starts raising and a strong bullish candle appears on the chart. After candle closing, buyers again try active buying to take the price further up, but sellers enter in the market and push back price to its starting level. This action results in formation of indecisive doji candle. In the next candle, sellers bring back price to its lowest position by gaining full control of the market, and hence candle closes at its lowest level. In an uptrend market, if an evening star candlestick pattern is formed, then it actually points towards strong bearish reversal signal. You can take short trade after closing of the bearish candle. Subscribe Trading Corner YouTube channel for more beginner-friendly trading updates. Dark cloud cover, which is a bearish reversal candlestick, which looks like this on the chart. This candlestick is made up of two candles, in which first candle is bullish green candle, while second candle is bearish red candle. In this candlestick setup, the opening price of red candle is exactly above the high of previous candle. And because of selling pressure, closing of red candle is below the 50% of previous green candle like this. This is what we call the dark cloud cover. Dark cloud cover works exactly like a shooting star candle. If we combine both of these candles into one candle, then we will get a shooting star. Now, if we see this candlestick pattern on resistance level, then we definitely take a short trade at its low break. For more trading strategies videos, do like and subscribe this channel. How exactly inverted hammer forms on the chart? Let's understand with the help of a simple example. When market is in downtrend and price reaches its lowest support level, then buyers start entering in the market and consequently start pushing the price upward, but sellers start exerting selling pressure and push the price back to its initial position. But this selling pressure is still not enough to push the price below the support line. This action from price results in formation of inverted candle. If due to selling pressure, buyers again start buying at lower levels and get success in closing the candle above previous candle high, then you can take entry in the market by putting stop loss below resistance level. Follow if you want more trading strategies. How to trade an inside bar candle. Let's understand with the help of an example. If two or more candles close inside a big red candle, then a mini consolidation zone is formed, which is a signal of an upcoming strong breakout. Next, if this type of pattern is formed after a big red candle, then a doji candlestick is formed at higher time frame, which creates an indecisive pattern. Always avoid to trade in such situations. Next, if a pin bar candle is formed after a big red candle, then this candle in this situation is considered as a potential reversal signal. Now, if a bullish candle closes after a pin bar candle, then it is advised to take a long trade from this position. Follow us for more upcoming beginner-friendly trading strategies. How exactly new traders can spot dragonfly doji on the chart? Let me explain with the help of an example. In downtrend market, a big red candle opens at support area, and sellers try their absolute best to push the price further down. But at the lowest point, new buyers enter in the market and start heavy buying, which results in significant buying pressure, and price closes near its opening level. This is actually a signal that buyers are commanding the market and are interested to take the price further up. Dragonfly doji can either be green or red, and it gives a signal of strong bullish signal. After dragonfly doji, a big candle of continuation appears on the chart, after which you can take a long trade. For more beginner-friendly trading tips and tricks, subscribe this channel for more informative videos. How exactly can you trade master candle? Let me explain with the help of an example. At lower levels of downtrend, a big red candle is usually formed as a result of aggressive selling by sellers, which we call master candle. After this, all these four candles should close within the closing of master candle, which results in formation of strong consolidation zone. However, the breakout of this range can be in either directions. If a strong bullish candle give a closing of at least 60% of its body above this zone, then it is actually a sign of bullish reversal. However, if next candle is bullish continuation candle, then you can definitely take a long trade above closing point of breakout candle. If you want more beginner-friendly trading tips and tricks, then subscribe this channel for more updates. Which candle is buyer's friend and which candle is buyer's enemy? Let's see. If these two candles are made on support area of chart, then it would be an excellent price action indicator to execute buy order. Now, this is what we call indecisive candle. This is neither buyer's friend nor enemy because this candle depends on what was happening on the chart previously. Okay, now these two candles are enemy of buyers. So if these two candles are formed specifically on top of the chart, then definitely you should not be the one taking a buy order. For more beginner-friendly trading tips and tricks, do follow this channel for more interesting videos.